Good morning. Zoom up, beyond up into the stratosphere. So I was looking through all of these stocks at the bottom, and pretty much they're relatively small gains. The market was up quite a bit more than what it is here. And then that jobs report came out and got that whipsaw to the downside and obviously back up again. So why I'm showing the 5-minute chart here to show how it whipped down and back up. So whether that was caused by, hedging around the report, or whether, the reaction was maybe just a display of the vast demand that's underlying here and just ripped prices back up on any opportunity to just get on board here, desperately trying to get on board on this turn. So other than those speculations, of course, we always look at the chart and say, what's the probabilities of what might happen here historically based on the chart pattern? And so looking at these NASDAQ futures coming up into this area of resistance and a declining 20, there's the potential for a reversal day. And maybe in part, why the reaction to the move down and then the buyers jumping on board here. Nonetheless, just looking at the chart, this is a nice move off of the low. And we usually look at the weekly chart, and the weekly chart has a really nice reversal bar there, right, which I can switch to now that I've shown you this. So based on this kind of a reaction, which is like, let's just call it a little out of the norm, which way is it going to go? Well, we've got two reference points now, the top and the bottom. Forget the numbers there. But so we've got a little bit of a trading range going on here pre-market. And other than it getting in and out of here, where's the opportunity? Well, it would seem that the opportunity isn't so great on the upside because of this congestion or resistance. And if we just look at it as an area, we're coming into the bottom of the area, already in it, where the 20 lies in alignment with those overlapping bars and where that resistance is. The hourly chart is in an uptrend, but now we've got this candlestick that communicates, if we forget the tails, it just communicates a slowing momentum within an uptrend. When we look at the tails, it says, what the hell's going on here? Nobody really knows. So whip to the upside and the downside, and the thing to do is you switch to a higher time frame, right? And say, does it make sense? Well, we go to the hourly chart and we see it's pushing up into resistance. It's still pushing up. There's no signs of a turn yet. And why I titled this on YouTube, the reversal day could be treacherous, because it typically is. Now, whether this is the reversal day or not, who knows? I'm saying that because of the fact that it's up multiple days in a row into this resistance area. At some point, even with the strength of this and the weekly chart looking like it does, there's going to be an attempt for sellers to take control here. Theoretically, based on this chart, buyers are still going to be lurking below, and the market is going to go higher once we see this pullback or retracement, whether it could be sideways, it could be down, whatever it is. These buyers aren't going away. So we have to just see how this unfolds. So the way to handle this as an intraday trader is looking at the charts in multiple time frames. We don't have any turn here. The first reference point of support is the prior day's low. Looking at this hourly chart here, we've got a pivot low here, major support. The next one is right below it, which means the downside at this point, unless something drastic happens, is limited as well, which leads me back to the title on YouTube, reversal days can be treacherous. And this may be a treacherous day as far as intraday trading goes. Another V bottom, it could be, Alex. So the way news moves at this point, compared to way back history, I guess has been moving fast right along, and V bottoms have become you know, more so than what they used to be, where the W bottom was always the way. A V bottom was like, wow, you never saw that after a market correction. Nonetheless, just the general concept of buying at resistance still holds true. Now, so how do you get on board? Well, money management, as we always talk about, is the key, but you need a humongous stop at this point so you could put your toe in the water. But I still think today isn't going to be the day to do it on a Friday with prices up against resistance and a declining 20 MA. So, other than day trades, maybe after, later in the afternoon, we actually see what unfolds here. We have a better information to make some intelligent decisions as to what to do as far as maybe more intermediate term. So we'll see if the hourly charts maintain the uptrend, whether it breaks here. This up here, even if this turned into a topping tail, 1 bar reversal days are not as reliable as they were, say, in the mid to later 90s. High frequency trading, algos, whatever, bull market that's been going on for a very long time, bearish reversal days especially. Buyers don't give it up so fast here. And funds, institutions, the worst thing, one of the worst things for them is to get left behind. And then they drive it up at the top. I mean, who do you think creates those wide range bars at the top and those accelerated runs? Right? You could say, oh, it's the novice trader. Well, there's novice institutional traders, and they get left behind. What do I do? Blah, blah, blah. And so they commit and they want to get these stocks on the books, especially at the end of a quarter to show that they own them. And, they're not, inept. Anyway, for us, ideally for a reversal day, you get at least 2 days where prices try and chop around and you got multiple hours going sideways and then eventually the break. And not only that, the concept of the void that we spoke about in MT Live, one of the things that we discussed was the fact that any area that is to the left here, so there's no void here. There's no accelerated run unless it's down here. So as you move away, okay, so let's say all of today's trading, Monday's trading, whatever it might be, that sideways price action moves away from this congestion. And that's why I said today, even if it breaks here, it's likely to be right back in your face again as an intraday trader because these reference points of support are directly below. So over time, moving away from that, this becomes less potent or less respected. And so let's just draw a little line here. So as I say, a picture's worth 1,000 words, right? Let's just say that this, comes down and it dips and it goes back up. Maybe it makes a new high and chops around. And, by Monday afternoon, let's just, for sake of the explanation here, an idea is that we have something that looks like this and then the break. And then you say, well, Greg, what about this? I'm going to tell you, well, it's not the same as it was here. Now you've had this time correction that's going to make this less reliable. Might there be a little reaction to it? Sure. But if it was to come down here, right, at 10:30, you'd probably be right back in your face again. Whereas if it happens over here on Tuesday afternoon, you might get the lower high and then drop down to the next level. All that being put in the context of this weekly reversal bar at support, and where if that correction was to unfold, would be looking to be buyers because of the strength of this move. Notice that giant wide range bar on volume, right? Indicating this is going to continue to move up. So let's go on. There's the lesson. Let's just look at the rest of what's happening here this morning. And I suspect most things look similar. All right, so we've got the whippy wide range erratic bar here that tells everybody's like, oh, down, up, now what? And so what are the other things that I always tell, those in the green room or students, whatever, when you see something like this, Obviously, it's confusing because it's confusing. It's not within the context of what preceded it. So just visualize, what does this look like on a line chart? So eliminate the noise. Right? What does it look like? And it's a little dip and a curve, and it's going back and forth. So in reality, it means very little in the context of this trend, and it hasn't broken any support yet. Now, the move up here, impressive to say the least. It's up at resistance. Maybe the 50 MA is the target if it clears this area. But the closer prices get to a reference point of resistance where every other chart reader sees it, then they're going to want to sell, the greater the potential for the reversal to happen. But again, reversal days are treacherous because buyers don't give it up so easy. So keep that in mind. Very nice weekly reversal bar here. Big green bar, call it an engulfing bar, whatever name you want to give it. Right? It's a big bar, and it says that buyers will be there on dips, and so shall we at the appropriate time. Dow, right? Same story, coming up into resistance there. Same story, same story. Bonds, and here's the fly in the ointment. We know what happened is the bonds accelerated. The markets went, oh, yield curve inversion again, yada, yada. Down it went, slowing economy. Oil went down, and a little dip here, and now it's right back up. So from the bull case, as we look at intermarket relationships, we know that bonds are up against this resistance area here, and with this very shallow retracement, which tells us that buyers are very aggressive and believe that this is going higher. And M tops, if this is turned into an M top, set up the unexpected. And meaning of that is the strength of this move is strength. There's no way other than to see it. But you see there's a range expands. You've got now a void. And the very aggressive buyers, if this does turn into an M top, and for those of you that don't know what an M top is, it's just where you get a bar, maybe like that. And so now you've got this retest right next to that reversal here, and then prices, start moving down towards some reference point, and that would help the bull case for equities, because then that is going to help alleviate that yield curve inversion. If bonds break out here and start pushing to the upside above this resistance area, I think it's pretty much a given that this reversal day will happen quite rapidly. So keep an eye on bonds. Oil, got that reversal day, the breakdown failure that I mentioned, maybe that was looking like what might happen. And just, pretty much a pattern that happens a lot when prices fall like this into an area of price resistance. So just when you know the basics, right? Support, resistance, trends, understand breakdown failures, it just becomes pretty matter of fact, common sense that this move here could turn into a breakdown reversal, a 180 reversal, whatever you want to call it, because of the way it came down and the location of where it was. Right? So now it's up to oil traders that are bullish on here to take control and get this to pop back up here. So maybe if they can't get through this level here and this chops around into next week and starts to break again and bonds are going up, expect equities to go down. So those are relationships that you can easily keep an eye on without even watching them. Just set alerts and see if bonds are breaking out. You could use TLT, and if CL is going down, or you could use USO. Those kind of things are going to tip you off that reversal day is highly likely to occur in the equity market. And gold, bullish as hell. Look at that topping tail just being ignored like it didn't happen. And so when we look at candlesticks, they create thoughts, right? Which is the norm and why we look at them, because they display pictures for us as to what actually happened. So sellers came in and knocked it way back down. So short-term profit-taking, bearish, yada, 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 right? Our first reference point of support is a prior day's low. And if we go back to the idea of what does it look like on a line chart, explosive move up that creates a void, sideways, up, 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 right? And now as it comes closer to all the way up to the top of where it's fallen before, well, if you're long gold, you want to start keeping a short leash on this, maybe selling some and, expecting that this momentum is going to stall. Since every time it's been here over the last few years, it's fallen again. So the thing now is, just common sense is that sellers are going to show up here again. In the past, it's gone up impressively. I know I've got this scrunched up, but, it went up rapidly and it looked impressive before, and it came down pretty impressively too. So now, if it's got a bullish reaction, meaning let's say over the next week or so, it goes sideways here, that's the concept of absorbing supply or bullish price action. It's up at resistance. I'm at the roadblock and I'm just eating through the block here. And that would suggest a really, really significant, move coming in gold, because from a longer term perspective, getting through this area, right, and going back to 1914, 1913 opens up the door to a monster move here. So you definitely want to keep an eye on that. All right. Opinion on UA. Nice big move. I know this has got multiple upgrades over the last several months after this big decline here. So getting through this area here would be super bullish, Fabian. Right. So the same thing as looking at gold. It's not as big a base, but there's a monthly chart that it's building a base, and we go to the weekly chart, up against resistance, which says, hey, this isn't the time to get on board, but let's see what this does next week and put it on a watch list for something that could be making a very nice move. So putting that in alignment with, the markets here in this reversal this week, and there'll be buyers on a pullback, so on and so forth, weekly reversal. This could be a really good stock that could provide some excellent returns in the rest of this year. So good pick. All right, guys, let me turn it over to Dan. He can review opens and some of these gappers and such. And those of you on YouTube, have a great weekend. We'll be back next Monday.
Good morning, everyone. And this is Friday option expiration day, one of my favorites. So we'll see what credit spreads we can get that expired today. We have 4 open positions in the weekly. AMD put spread looks great. Apple half lot looks great. Just let it expire. Worthless, the back half. ANTM. I said to try to get out of the dime yesterday. I'm not sure if we did. And Lyft. We have a put spread. Swing trader, we have a bunch of open positions. AON long stock looks great. SUI long stock, and it's a beautiful 1, 2, 3. CPRT, and I put a couple 1, 2, 3s in a Facebook this morning. And SUI is another one. So Greg, I'm actually thinking of maybe doing, I know I talked about quality trends for next week's MT Live, but maybe doing it on 1, 2, 3 continuations. There's been a lot of nice ones. CPRT, we have a put spread, looks great. Bravo Romeo, long stock. CHD, long stock. GWR, covered call. ARNA, this is our marijuana stock. We sold half already. SPWR, a longer term solar play. We sat through some pain over here, but we entered after this wide range bar. And so it held. Lyft, we're long stock. Pins, long stock on that double bottom. AMD, long stock. That was a no-brainer yesterday. And look at the morning action here, the first 15-minute bar. That's when we got in. AMSC, we're short stock. We're out of 2/3. That's our only bearish position, and it's working beautifully. KMI, this is a core holding we entered yesterday. TRP, long stock, closed with a bearish topping tail, but we got our stop in place. RSG, long stock, and that's what we call a minor 1, 2, 3, because yesterday's bar is above it, but it's still bullish. Looks great. And DHR, long stock. All right, that's our opens. So you see, we've been hitting this rally pretty hard. S-Fly McGraw asked me about this pre-market. The daily is a mess, but I said, hey, look at the monthly right here. Greater than 100% retracement, bottoming tail, little retest, and a price void. Remember concept price void? Yeah, I don't play rumors. I just play charts. This La Jolla we saw yesterday, gapping up here. I got no interest in that. Sony, it's an ADR, bullish gap, but I don't like all those gaps. Like GLD. Yeah, GLD. Oh, I actually had GLD here. Let's watch. It's gapping up again. But I had it on my list to maybe for a bear call credit spread. And now it's gapping up again. Look at that over the high. We'll keep an eye on it. PRSP had earnings, 2280. Bullish gap, but we'll come back to it. Papa Delta, 5067. It's gap and resistance. Domo, it's a bearish gap. 2635. It's too excessive to try to short it. Zoom Z, that's a bearish downtrend, but a bullish gap. Look, it's gapping over this pivot. So that's worthy of a watch. Putting Zoom Z there. And I got beyond here in the upper right. Remember we were looking at the option pricing, and we actually were talking about, if you had a bearish fundamental of selling the 130s, and I was shocked that it had an expected move, well, of $11. So okay, so it's blowing through its expected move. Implied volatility 272%. Wow. So yeah, the folks that might have said, hey, let's short the 110s because of resistance, they are waking up to a big old headache. But now that's going to make that a whole lot more further from the rising 20. It's not a shorting pattern because it's gapping from consolidation. But if we get a bearish intraday, that is a candidate to short a bear call credit spread that expires today. ZM, we've been watching this for a while. 92. Well, see, if this were gapping hypothetically here, that would be a tier 1 gapper. But now it's gapping too big. It's gapping all-time highs. Let's see what the expected move of that was. Expected move also was $11.79. Daku earnings getting smacked. That's a bearish gap. Let's see what it does. That could be a call spread candidate. Ali, 95.90. That's a mess. Mountain. There's no volume, but it looks like it's a bullish gap up here. Let's watch that for a put spread. After it opens. GES, GES. Gapping down a little, and that's a mess. Caesars, it's not earnings, but it's the news about, I don't know, getting bought out or not bought out. Gapping up. It's a bullish gap though, 967. So this is worth watching. Mohawk, one of you mentioned yesterday, and we were long this as a core trade. And we took our profits on this 2-bar reversal. But I still like the monthly. And look at that bear sandwich. Bear sandwich on the monthly. Lift we talked about. Cell G I mentioned yesterday as a Iron Condor candidate. Let's price that out this morning. All right, there's the open. SAIC. Let's see if we can get a 1, 2, 3 for Monday. Home got smacked yesterday. You might get a day trade out of this. Watch this 15-minute high for a day trade. You gotta, because then it's a nice rounding bottom. Look at beyond here. Wow, those shorts have to be not happy. LK, this was our beautiful 1, 2, 3 off the low.